Good morning, guys. I hope you guys are having a great day. Personally, didn't sleep much at night. Was watching futures and some other stuff, and but I just went over the gamma report and read a few comments. From the rate from yesterday, from the J Powell meeting. Things are a little bit all over the place, right? One thing that I do want to say, the futures, they were very red when I last checked them, and in the morning they were green, right? And then we had the GDP news today. GDP grew at a 6.9%, which is good, right? And the rate hikes, they're sticking with four, starting with March. But now the question is, how does the market go on from here? How are those comments going to be digested, right? Is it the bottom? Do we rally from here? Or do we get a relief rally and then come back down? How does the market exactly structure in the coming months, right? Personally, I'm a big believer of the monthly candles more than the daily and the weekly. The monthly candles, they're usually always true. No matter what comments come in the market, what happens, but the monthly candles always give us some sort of hint, right? And as we went over the SPY monthly candle, if I just go over the monthly candle, there is no way that well, I could be wrong, but I don't think we just take out this month's candle next month or the month after and we continue rallying. I think we see a lot of consolidation, maybe a couple more red candles this year, and then let's see how it goes on, right? And if we go back to SPX, I'm just going to go over the daily chart. We'll go over some levels and then some comments that I read from the gamma report and what actually may happen. The title today is 4300 SPX. The 4300 level will be very important. If we continue holding above 4300 SPX, there's good chance that we might see 4500 and all the way towards where 4600. This range right here. This range we might see. This is above 4500 and just near 4600. There's a good chance that we come back up here and then see how the market reacts and maybe come back to 4300 again, maybe in February or maybe in March, whenever that may be. All right, but the day 4300 level is broken. The day 4300 SPX is broken down, 43 and hold under. That's when the macro selling may happen, right? The macro selling has to happen, the big boys we can say, right? If macro selling happens under 4300, that's when we will see legs lower all the way towards 4000, maybe 3800 SPX. All right, but under 4300, that's what the major selling has to take place in order for that to happen. All right, and for now, we have these levels. And another thing I'm going to go over today, we have support at 4278 and then 4200, and then we have resistance at 4400 and then all the way towards 4500. And then we also have this level, which is probably a midpoint right now, roughly 4300 and then 4350. All right, it's like a mid-range support resistance mix. All right, and so these are the levels that you should have on your notes. One thing I want to go over, in case to get the rally up, we're day traders. I was on sidelines for the last 1-2 days, but obviously I also want to play some trades, right? In this market. Now, if I go over to VIX, one thing that I just want to go over on the VIX, I can tell you one thing: if we break under 28 and hold below 28, we likely see a relief rally and reduction in IV. All right, now what do I mean by reduction in IV? Basically, what's going to happen if VIX is under 28 and we do get the rally up, the calls that are priced right now, if you're trying to buy some calls, they will go up. But if as VIX continues coming down, if you don't take profits on those calls or roll out, those calls will lose value much faster. The next day, that same call may be worth $1-2 less. If you buy a $5 call, it goes to $8. You hold it overnight, even though the stock, there might not be a gap up. If the stock is at the same price, goes up another $1-2, and VIX is down another $2, those calls will probably lose value. They might now be trading at 7.25, and you might be asking, why did my call options go down? That's one thing to know. When we get a rally like this, you have to take profits on your calls and roll out or maybe re-enter again. All right, so VIX under 28, we will see a relief rally towards 4400 and 4500. It's a possibility, and it's likely going to happen, right? The market has gapped up today with the GDP comments, so it's likely going to happen. A lot of the rate hikes were priced in this move down on SPX. All right, so VIX under 28 and we hold underneath 28, we likely come visit the 21 range, I think 20, and that's going to give us a little relief in the market, and then we see. The only time that you need to be worried is when SPX is trading under 4300. If SPX trades under 4300, that will not be good. All right, then there's a good chance that we might see more selling if there's some news comes out or whatever it may be. But above 4300, there's a good chance that the market continues higher. All right. There's a nice gap up in the morning now from negative futures to positive. That's a good sign in the market. So let's see. And apart from that, some cloud stocks are running now. I think is up huge in the pre-market, right? I'll remove my drawings here. Um, but these stocks, again, be very careful playing call. You have to be very patient, look for good entries. This price action was not good. We're at this level right here. To me, it looks like it might hold today. But the only two things I see as soon as I pull over this chart is this huge gap, which was supposed to be filled, right? I don't think it's filled. And is above this support level. And if we can continue holding this range all day today, especially this range right here, above 540, 545, now is something that I'm going to keep my eyes on. It's up nicely pre-market, and then we might get a move towards 600 and so on, and then play that bounce. Some of you guys are playing Nvidia. I love this company as well, obviously, but man, all these drawings, let's remove them. And right now, 240 calls, so many of you guys played 240 calls, 250 calls, many of you guys played on these big volatility. Some of you guys take profits, some of you guys don't. If you were tracking those options, you saw how fast they moved, right? Nvidia, I can give you a level right now. As long as it continues holding about 235, right, we likely see a rally towards 250. And then after 250, maybe we come down the next day. I have no idea, all right? But if we hold about 235, 237, we're probably going to go test 250 this week. And if the market holds strength today, 250 will happen probably today itself on Nvidia, all right? AMD, another beat down a stock, and has been holding the 200 moving day average. AMD, if it can get about 114, 115 as the level, 114, 115 plus hold, we may see 123-ish, I believe that's the level. Yep, 123-ish, around here. All right, so we might see 123 on AMD. But when the market goes down, if we are going to go further down, they are going to give us a relief rally. We'll probably have a setup here, and then we see what happens. All right. And then on another chart that I have, one thing that Netflix also, guys, Bill Ackman, he announced a huge stake in it. Now, Bill Ackman, one thing that I remember, back when a few years back, CMG got completely beat down. CMG, Chipotle was completely beat down. He was the one that came in and he put a huge stake in it right at the bottom. And that stock after never looked back. It just kept going up. He bought CMG when it was like 180, 200. Some news came out, and CMG now is $1,800. All right. Netflix, I think, is a great company for future, and from 700 to 350, that's a huge discount for equity. I think it's viable, right? I think it's a little equity scaling. Why not, right? Well, the management they have, the teams they have, it takes a long time to build that up, right? To be have it, and because I've been in the production business myself a few years ago, it takes a lot of hard time, and no other company is going to come and just become Netflix right away. Yes, Disney's there, Amazon's there, but for them, they're still setting up. But Netflix is Netflix, I think, and I think this is heavily discounted here. Can it go lower? Yes, it can. But here is where I would start scaling in small into my equity positions, right? And then we see what happens. But Netflix, above 400 hold, this can see a nice rally back all the way to the gap fill. So even if you get a 50-point move, why not? So 400 plus hold. Right, the market is giving us a little positive vibes, but remember my comments: VIX under 28, and then SPX holds 4,300. We go through 4,400, we get that relief rally, and then we see what happens. Maybe Friday, maybe Monday. All right. Apart from that, Google stock that I'm keeping an eye on. Right, I think this was one of the strongest stocks last year, and if we can get above the 2650 level, which happens to be roughly this 200 MA, which is 2671. If we can get above the 200 moving day average on Google, right, 200 MA plus hold, then obviously I would like to play to the upside of relief rally. One thing that I do want to let you guys know, do not, if you're gonna play call expecting a recovery like this, like just straight to the upside, don't be fooled by it. VIX can come down, it can fall sharply even if the stocks just stay sideways. All right, and this is gonna kill premium to calls and puts, and this is when the market becomes really hard to trade, and then people wonder what the heck happened here. All right, so don't get stuck into this chop, because if this chop happens, this reminds me of 2015. VIX can go all the way towards 17, 16. It does not mean the market will rally. All right, the market can just chop in small moves, and you will not get the move on the call side or put side. All right, so be careful if you're buying calls on big tech, right? Even if they hold, they might go up, they might be green 20 plus for the day, but the calls may still be down. Why? Because there's a lot of premium in those calls, and right now the ATR has increased. So if I go on Amazon, for example, right, I'm gonna give you guys an indicator here. if we go on the average true range, ATR, as you guys can see, in the last few days, right, since this big move, the ATR has come all the way towards 105. All right, before it was how much? 79, 80 bucks, and before that, in this chop, it was nearly 61. So the ATR is up 35%. Average true range, ATR basically means the expected move range for the day. All right, right now it's at 109. If this reduces, right, that means there won't be big moves happening. There might be small moves. So I mean, expect big moves, yes, but all I'm saying is if the ATR right now on most stocks is high because of this big move that we had the last week. All right, and when the ATR goes down, that's when they take a premium from calls. IV goes down, and then you lose money on calls and puts. So just keep this in mind if you're playing calls. Go in small. This I'm telling you from experience. In this market is when traders lose the most amount of money. You could be on the right side and still lose money in options. All right, so just be careful. That's something that you need to know. All right, and tech Qs, same thing, is the same chart as SPX. So they're following exact same right now, and the ATR on this is also highest 10 from where it was 5 or 4 points back then. The ATR is double. So if you're trying to play calls and puts on Qs, they're probably priced at least 70-80% higher than they were 2 weeks ago before we got the downshift. So that's something that you guys need to know. And on Amazon, one thing I can tell you guys right now, this is a major indicator I'm giving you. If Amazon holds under 2,800, market is not going nowhere. I can tell you guys this right now. And this is for the entire market. If Amazon holds under 2,800, market is not going nowhere. Avoid. This is the biggest indicator that you can have in the market right now. If Amazon holds under 2,800, avoid upside. You might catch it for the time being, but if they sell Amazon off, that's a major red flag. The market will follow. All right. Amazon's been leading big to the downside. And KB, you had some questions regarding in the money and out of the money options. Yes, guys, I'm just gonna go over something. Right, many of you guys know this. Let's go over Twitter just for an example, right? If Twitter is right now trading at, let's say, 34 bucks, let's say current price is $34, and your strike is 35. Yes, that's out of the money. Okay, if your strike is 33, yes, that is in the money. So KB, I'll speak more. I'll type less. Now 33 has intrinsic value. Intrinsic value on 33 is basically current, as long as the current price is higher than Twitter. So 34 minus 33. So 34 minus 33, right? Minimum price on this option you will get as long as you're on the call side is $1. $1 is minimum and plus premium. And premium depends on time left on the calls. More time, more premium added. All right, that's why calls are expensive the further you go out. All right, and the $35 call has zero intrinsic value. Okay, and this basically means that every day, as long as Twitter, if it doesn't move up, it just stays sideways, this call 35 is likely to lose value every day, which is known as theta, time decay. All right, from that, I mean $33 also has a theta, but the minimum is $1 intrinsic value that will stay there no matter what. All right, so yes, you're right. So 35 is out of the money. However, Twitter gets to 37 bucks, then $35 call will be minimum of $2. All right, it's always the current strike price minus the in the money strike. That is always the intrinsic value. Okay, so that's something you need to know. And once you understand intrinsic value, guys, options trading actually becomes much easier. It'll help you guys determine to play strangles or not. Right, to play strangles, you have to understand intrinsic value, and then you go on from there. Okay, and with that, I think okay, I'll go over one thing. Strangles. Yash called it a great strangle yesterday on Amazon, right? One thing that I just want to go over, he called it a great strangle. The strangle basically was this I'm just giving you guys tips, guys, right? I don't need to, but I just like giving you some good stuff to you guys. If Amazon, let's say, is trading at 28.50, for example, and now you want to play Amazon both ways. So you buy, let's say, for example, you decide to buy 28.60 call, and you buy 28.40 put, thinking a big move is going to happen. But now the cost of this call is roughly 45 bucks. The cost of this call, a put, is roughly $45. And you want to play this strangle. Amazon's trading at 28.50. You need to understand this. The total cost here is $90. All right. And now let's say Amazon moves 75 points to one side. All right, 75 points to one side. Let's say, for example, let's say Amazon goes to 29 28.25, for example, right? Your 28.60 call will not gain a lot of premium. It will likely gain more intrinsic value. All right, so 28.60 intrinsic value here is roughly 65 bucks, I believe. 65 plus some premium. All right, but the 28.40 put is going to lose a lot of value because now it's gone way too far. So this might be trading, let's say at, I don't know, maybe 30 bucks. It lost $15 out on premium, or it will actually lose more premium, I think. But let's say $30. I'll put this in your favor. They'll be worth $30. How much is your strangle worth? $90 or 95 bucks only, right? Now, because for your strangle to be worth really a lot, Amazon needs to make more than a $90 move to one side from your strike price in order for you to really benefit. All right. So that's what I meant yesterday on Amazon by intrinsic value is not really worth playing this. So that's why on Amazon you have to be very careful when you play strangles. Maybe buy some time or go out. Okay. So I hope that makes sense. And if it didn't, don't worry, I got you guys. Maybe on the next one it'll make sense. And thank you so much, guys. There will be a relief rally sometime, right? VIX under 28, Goldman Sachs, I see you, yes. But under 40, as long as VIX comes under 28 and SPX gold, we might have a relief rally in the markets. There's no doubt, it's very evident. All right, so there will be a relief rally. Personally, I'll be looking to play some calls. Let's see. We'll be live on voice chat. And with that, thank you so much. I haven't slept, but we'll see you guys back in the chat live, trading live on voice chat. See you guys.